So here is a new video about finance and investment. What is finance? Finance is a term of matters regarding the management, creation and study of money and investment. It involves the use of credit and debit, securities and investment to finance current project using futures income flows. Because of this temporal aspect, finance is closely linked to the time value of money, interest rates, and other related topics. Finance can be broadly divided into three categories. First, public figure; second, corporate finance; third, personal finance. They may there are many other specific categories such as behavioral finance, which seeks to identify the cognitive, for example, emotional, social, and psychological reasons behind financial decisions. Takeaway: finance is a term broadly describing the study and system of money, investments, and other financial instruments. Second, finance can be divided broadly into three distinct categories: public finance, corporate finance, and personal finance. Third, more recent subcategories of finance include social finance and behavioral finance. Fourth, the history of finance and financial activities dates back to the dawn of the civilizations. Fifth, while it have roots in scientific fields such as statistics, economics, and mathematics, finance also includes non-scientific elements that liken it to an art. Understand finance. Finance is typically broken down into three broad categories: public finance, corporate finance, and personal finance. Key finance terms. These are some key finance terms you should be familiar with. First, assessed. An asset is something of value such as cash, real estate, or property. A business may have current assessed or fixed assets. Second, liability. A liability is a financial obligation such as debt. Liabilities can be current or long-term term. Third, balance sheet. A balance sheet is a document that shows a company's assets and its liabilities. Subtract the liabilities from the assets to see the firm's net worth. Fourth, cash flows. Cash flow is the movement of money into and out of a business or household. Compound interest. Unlike simple interest, which is interest added to the principal one time, compound interest is calculated and added periodically. This result is interest being charged not only on the principals but also on the interest already accrued. 6. Equity. Equity means ownerships. Stock are called equities because each shares represent a portion of ownership. 7th, liquidity. Liquidity refers to how easily an asset can be converted to cash. For example, real estate is not a very liquid investment because it can take weeks or months to sell. Profit. Profit is the money left over the after expenses. A profit and loss statement shows how much a business has earned or lost for a particular period. History of finance. Finance is a study of theory and practice distinct from the field of economics, arose in the 1940s and 1950s with the work of Harry Marquis William Sapp, Sharp Whiskers Blacks, and Merton schools to name just a few. Particularly realms of finance such as banking, lending, and investing, of course, money itself, have been around since the dawn of civilizations in some form or others. The final transactions of the early submarines were formalized in the Babylonian Code of Hammurabi. This set of rules regulated ownership or rental of land, employment of agricultural labor and cadets. Yes, there are loans back then, and yes, interest was charged on them. Rates vary depending on whether you were buying grain or silver. By 1200 BCE, cruise shells were used as form of money in China. Coined money was introduced in the first millennium BCE. King Croesus of Lydia, New Turkey, was one of the first to streak and calculate gold coins around 564 BC, hence the expression rich as Croesus.